This is the performance summary for week 18 of 2025, which was the week ending on May 2nd. Let's start by inputting the starting and ending balances for the week. So the starting balance was on Friday, April 25th. And the ending balance was on May 2nd. So I made a little bit last week, $158, which is a 0.58% gain. And these were the 3 trades that we did last week. And we can see that in the fraction column, each one was allocated 10%. So instead of the usual 20%, it's a 10% half allocation because strategy has determined that we are still in a bear market condition, during which times it takes reduced exposures. So the first trade was Mondelez. And so the mean reversion, or the dip buying nature of the strategy, picked up on this dip right here and bought here on a Monday. And we are in earnings season, so the company announced earnings on Monday after the close, so we caught a nice pop upwards, and we sold here on the Friday. And on that one, the stock was up 3.29% for the week. Next one is T-Mobile. That was a really good trade. Stock was up 7.42% from open to close last week, and this is how it looks. So the prior week after earnings, it took a bit of a nosedive, but then we bought here on the Monday, bought the dip and sold here on Friday. And we made, the stock was up 7.42%. And the last one we did was United Health. That one was down again, 4.72% for the week. And so after an earnings release, the week prior to last, it took a hit and it continued to go down, and this week as well went down a little bit. So it was down 4.72 when we had a 10% allocation to that. And let's go ahead and input the ending balance into the cumulative tab. And let's update the equity curve. So the yellow, thick yellow line is the equity curve of the current version of the strategy that we're trading, which was updated in early April. And this is how the equity curve would have evolved from June of 2024. And the thin gray line is the actual account balance, which includes both the new version and the prior version of the strategy. And let's look at the equity curve over the longer term. So over the long term, and this is a back test going back to 1994, strategy is expected to return 19.1% annualized compared to the S&P 100 or S&P 500, which is expected to return about 8% over the long term. And year to date, including the May number, the strategy is up 3.4% for the year so far, whereas the S&P is down 8.2% for the year. And this is how the equity curve looks back tested long term compared to the S&P 500. And in this update, I also wanted to talk about a new strategy that I will be releasing on June 1st, so in a little less than a month from now. And that is a relative strength momentum strategy that trades just once a month. It holds up to 3 positions every month, and the universe consists of sector funds from Fidelity, which can also be traded using the ETF analogs, and it also trades some metal ETFs and also some inverse ETFs on the S&P and the NASDAQ 100. So it'll be a good complement to the weekly reversion strategy, which I currently offer. They combine well because of the diversification across time frames. Weekly reversion is, of course, weekly. This one is monthly. And there's also going to be diversification in styles. Weekly reversion is a dip buying system, whereas this is a momentum, relative strength type system. And the annualized expected performance is going to be 17% over the long term with a Sharpe ratio of 1. And this is how the equity curve looks of the new relative strength momentum strategy. This is back tested going back to 1991. And this strategy will be offered as a package with weekly reversion. So there's not going to be a new subscription for this or anything. It'll just be added in to the current subscription. So that's the performance review of week 18 of 2025. If you want to learn more about this strategy, and if you want to learn more about the new strategy as well, which I'll be uploading onto my website in a few days, you can go ahead and visit my website at returnstream.com. Link is below. Thank you.